Good morning, everybody. Mike Vacchi from PrincetonTrader.com here for ntmarkets.com with your Tuesday morning pre-market webcast. Okay, well, yesterday was a day that looked a lot like many days in this rally, where it was just a melt up higher, not a melt up, it was a grind up higher, slowly but surely pushing the bears out of the way to the point where they simply step aside and we go higher. Now, the big question this morning is, was yesterday's action that did 1592 quarter, is that a double top with respect to the 1593 high of April 11th? I have no idea. Nobody knows. Anybody that tells you that they do isn't telling you the truth. So we're going to have to see how it plays out. The reality is this. We have not yet seen a situation where we have come this close to the upper band, in here, without breaching that band. Breached it, breach. So the market needs to play itself out a little bit. That said, we've really run up off of the 70 area, 60 to 70 area, and I think a little intraday pullback today is definitely in order. I'm looking at a couple areas with respect to the pivots. I'm looking at 84.85, which is your daily and 3-day zone. And then I'm looking at 1570 to 71, which is your 9 and 20-day pivot. So you've got two double pivot zones to look at. You can check those out. Those are always up on the website, PrincetonTrader.com. There on the homepage. But you've got the Fed meeting tomorrow. You've got non-farm payrolls on Friday. So you got a lot of catalysts this week. ISM's tomorrow. Chicago PMI today. Consumer confidence. If we want to go up and do the upper band, I think that's very, very, very possible. I've talked for a couple of months now about how we've been trying to put in this exhaustion top, and it hasn't worked. It has not worked. We're not seeing the kind of ticks, fear, blood, etc. that are going to dictate a longer term reversal. We didn't even get them up here when we're touching the third standard deviation Bollinger Band. So I'm still looking for that kind of a high to mark a top, or some type of a negative news event that will completely change the sentiment of the market to the point where it stays changed and we head down. Now, we tried that. We tried it with Cyprus. We tried it with the fiscal cliff. We tried it with that 88,000 jobs print that came out last month. But you have to be careful with the economic news, because the economic news gets immediately spun to something that's going to keep the foot on the pedal of the Fed. So I think it's much more of a macro event. But every time this has happened, we continue to bounce off the lower band and come back up and make new highs. Now, we've yet to make new highs on this move. But let's look at this logically. Let's look at this reasonably, okay? Here's your chart. 1340 to 1593. What's more likely? We roll over and die, or we go up and take out that upper Bollinger Band one more time? I think if you set aside whatever your particular position happens to be in the market, whatever is happening on your P&L, I think that the answer to that question is going to be, we go up and we go through that upper band and we make another high. Am I buying that move through the upper band? Absolutely not. That's when I want to get short for the move back to the lower band. But what I want to caution all of you is, since the majority of you aren't in our room, is that you've really got to be careful anticipating that kind of a move. We're sitting at 1587. A band punch is up at 1603. That's a lot of pain to take. That's 16 handles worth of pain. So, be patient. Let these catalysts play out. But understand, if we start to move through the upper band, you're a seller. You're not a buyer. Okay, everybody have a fantastic day. Mike Vacchi, PrincetonTrader.com. For ntmarkets.com. I will catch everybody tomorrow morning with another webcast. Trade them well.